Hello everyone, welcome to weekly lecture videos once again. And in this video, I'm going to discuss different forms of organizations. In Australia and New Zealand, there are three major forms of businesses: sole proprietorship, partnership, and corporation. A sole proprietorship is a business that is owned by one person, sometimes called a sole trader. Okay, this is the simplest type of business to start and is the least regulated form of organization. So for this reason, there are more sole proprietorships than any other type of business, and many businesses that later become large corporations started as sole proprietorship. So you can see the advantages here, easiest to start. The owner of a sole proprietorship keeps all the profits. That's a good news. The bad news is that the owner also has unlimited liability for business debt. This means that creditors can look to the proprietor's personal assets for payment. Similarly, there is no distinction between personal and business income. So all business income is taxed as personal income. Okay, so you can see single owner gives all the profit. However, the liability is also unlimited. The life of a sole proprietorship is limited to the owner's lifespan. And importantly, the amount of equity that can be raised is limited to proprietor's personal wealth. Okay. These limitation often means that the business is unable to exploit new opportunities because of insufficient capital. The ownership of a sole proprietorship may be difficult to transfer since this requires the sale of the entire business to a new owner. Okay, so you see some other advantages like least regulated that we discuss, and the tax of the business are the income of the business are taxed as personal income. However, the life is limited, and also the ability to raise equity is also limited and difficult to transfer ownership. Okay, next is partnership. A partnership is similar to a sole proprietorship, except that there are two or more owners or partners. In a general term, all the partners share the gains and losses in a general partnership, and all have unlimited liability for all partnerships debt, not just some particular share. Okay, the way partnership gains are divided is described in the partnership agreement. This agreement can be an informal oral agreement, such as let's start a business, or lengthy formal written document. Okay, so you can see that advantage is two or more owners. However, there's unlimited liability for each owners. Okay, and it's also relatively easy to start because you can just start a partnership business by an oral agreement to start the business. Okay. In a limited partnership, one or more general partners will run the business and have unlimited liability, but there will be one or more limited partners who do not actively participate in the business. A limited partner's liability for business debt is limited to the amount that partner contributes to the partnership. Okay, so there are two types. One is general partnership, another is limited partnership. The advantages and disadvantages of partnership are basically the same as those for a sole proprietorship. The partnerships based on the relatively informal agreement are easy and inexpensive to form, right? General partners have unlimited liability for partnership debt, and the partnership terminates when a general partner wishes to sell or dies. All income is taxed as personal income, as in the sole proprietorship, and the amount of equity that can be raised is limited to a partner's combined wealth. An ownership by a general partner is not easily transferable. A limited partner's interest can be sold without dissolving the partnership. Okay, so you can see the advantages. Income tax as the personal income, and partnership dissolves when one partner dies, difficult to transfer ownership. A corporation is the most important, at least in terms of size of business organization in most developed economies such as Australia and New Zealand. A corporation is a legal person, separate and distinct from its owners, and it has many of the rights and duties and privileges of an actual person. Corporations can borrow money and own property, can sue and can be sued, and can enter into contracts in its own name. Okay? A corporation can even be a general partner or a limited partner in a partnership, and corporation can own shares in another corporation. Okay. Not surprisingly, starting a corporation is somewhat more complicated than starting the other forms of business. Forming a corporation involves preparing a constitution. The constitution consists of rules describing how the corporation regulates its own existence and must contain a number of things, including corporation's name, intended life, its business purpose, how the directors are elected, number of shares, and so on. In large corporations, the shareholders and managers are usually separate groups, right? The shareholders elect the board of directors, who then select managers. Management is charged with running the corporation's affairs in the shareholders' interest. In principle, shareholders control the corporation because they elect the directors. As a result of the separation of ownership and management, the corporation has several advantages. Like ownership can readily be transferred so that the life of the corporation is not limited. Okay, so you can see unlimited life. The corporation can borrow money on its own name. As a result, the shareholders in a corporation have a limited liability for corporate debt. The most they can lose is what they have invested. Okay. The relative ease of transferring ownership, the limited liability of business debt, and unlimited life of the business are the reasons that the corporate form is superior when it comes to raising cash. So you can see the ownership and management are different. Transferring ownership is easier, and due to all these advantages, it's easy to raise capital. Okay, the corporate form has several disadvantages too. Since a corporation is a legal person, it must pay taxes. Moreover, under a classical tax system, money paid out to shareholder in the form of dividend is taxed again as income to the shareholders. As a consequence, under this system, corporate profits are taxed twice. Okay. So you can see that it's complicated because, as we already mentioned, that it should be formed as a legal person. So it requires lots of documents and lots of authorization from different organizations, and also corporation has to pay taxes. Corporate forms have various nature or various features around the world. Okay, exact laws and regulations differ, of course, but the essential features of public ownership and limited liability remain. Okay. These firms are often called joint stock companies, public limited companies, limited liability companies, So in this table, you can see some well-known international corporations, their country of origin, and um, type of the company, okay, and the translation that what their corporate form of business called, okay. For example, Microsoft Corporation, the United States is a public company. Then a corporation is called joint stock company in France. In Germany, a company with limited liability. In the United Kingdom, they're called corporation, and so on. Okay. So this is the end of our discussion in this learning objective. Watch the next video, which will be the last this week, where we will be talking about agency problem. Okay, thank you very much.